It is live time again. Welcome everybody to Gold, Silver, Pros Tuesday Cowboy Metals Live. We broadcast from the great state of Texas. And we do it from the comfort of our home in Dallas-Fort Worth. And we take no BS. So for today, we are going to talk about, and I did my sound check, we're going to talk about Jim Cramer. We're going to have a little fun today, guys. We had so much seriousness on the channel, and it's been a serious few days for me. So I think we're going to have a little bit of fun. Today, we're going to talk about Jim Cramer. People love to make fun of him because he is such a luminary on CNBC. And there seems to be a lot of debate about whatever he says causes debate. So it's fun to talk about just because he galvanizes people in the investment community so much. And he's not known as a gold guy. He's no more of a stock guy, you know, that kind of stuff. I remember years ago, the first time I heard Jim Cramer, it was actually on the radio. I was doing work around my first house that we had bought, and I caught him on the radio. I used to do rental properties back then, so I'd listen to him when I did rental properties. It's good knowledge. I think back on the radio, he was a bit more serious. You know, he's a smaller media guy, and I think he had to work really hard. Now maybe perhaps a little bit easier for him being on CNBC, and not only that, but more out front, that people are basically gonna want to listen to whatever he says. And so I thought we would talk about gold, but then let's look at Jim Cramer. Let's look at his predictions. I think you guys may be surprised with how he's done. And I think that'll be the fun part. By the way, thank you, Peter, for Hawaiian, for joining us and riding shotgun as moderator. Peter has been the moderator that has stayed with us the longest. He's been here for just about every episode since we made him a moderator. So he is now the only channel moderator. And thank you, Peter, for being there for us. Really helped us to consolidate down to the one person. Thank you for being a part of that. Thank you, Silverblade TE, for joining. Neil Han Dynasty is here. Jake's Custom Parts is here. Angel OG is in the house. D-Worm is here. Who else do we have? Hughes 004. Todd and Prepared is in the house. Joseph S., thank you so much for being a supporter on the channel. Derek SRT, Edge Brand Agency. Man, we have some new faces in here. I've seen some of you guys before, but some of these names are cool. Roman McPhilly, thank you everybody for joining. Before we get started, as usual, we have a poll, and the poll is Jim Cramer in gold, and I put a bunch of fun answers in there for us to have fun with. Please answer that poll. None of it's meant to be too serious. Sound is good. Let's jump right into the presentation. This is the article. I think it's a second time that Jim Cramer has mentioned gold, and this is the article that had came out on CNBC. Of course, Jim is the host of Mad Money on CNBC, the television station. And it says here, chart suggests investors should ignore crypto cheerleaders and stick with gold, Jim Cramer says. Jim Cramer warned investors stay away from crypto despite Bitcoin's recent gains and instead look to gold. My opinion on that is I thought that crypto will go back up. I think we're seeing that. I don't think it's anywhere near the end. I'm not going to make a comment on crypto here. We're going to stay on the gold stuff. The charts, as interpreted by Carly Garner, this is a quote from the article, suggests you need to ignore the crypto cheerleaders now that Bitcoin's bouncing. And if you seriously want a real hedge against inflation or economic chaos, she says you should stick with gold, and I agree. Jim said. That's Jim's quote, not mine. They do point out on this chart, they're picking on Bitcoin a little bit. They do point out where Bitcoin does follow the NASDAQ. This is a relationship I've been aware of. And so Jim's basically saying it's a risk asset, not money, which I think he's correct at this point in time because most transactions really are for investment in Bitcoin, not money. But this is about gold, so let's talk about that. Of course, that's all he said. So that's all he said about gold. We're going to poke fun a little bit here. There's an inverse Cramer ETF. This is put up, a free newsletter and everything. If you guys, I'm not affiliated with this, but if you're interested, inverse Cramer ETF, you can sign up for the newsletter. And I thought, okay, well, let's analyze what Jim has done here. And I knew a bunch of people would have analyzed him already. I knew I didn't need to come in and analyze. I'd just be able to pick this stuff up. So let's go over some of the analysis. So I'm going to start with Reddit. Reddit's really cool for finding stuff you can't find anywhere else. And I do have some other stuff for more mainstream media outlets, but we're going to look at sort of the people's view, if you will, on that. This person, Knob Jost, 2 years ago analyzed Jim Cramer in 2021. He analyzed 700 buy and sell recommendations. And this is the return. So if you look at this analysis, and again, I don't endorse this, I didn't do this, I'm just pointing out other people. If you look at it, Jim Cramer, after 1 day's time, made 58.9% correct picks. That's buy recommendations. So to buy stuff, 1 week and 1 month, it didn't hold up so well, but till date, meaning the entire year, it actually turned out okay. So on his buy recommendations, not so bad. If you take the 651 that this gentleman looked at, of course, part of that is also sell recommendations. He did very well in sell in the short term. Long term, it looks like some of those stocks may have rebounded, although if you're selling, you don't really care about the long term on the stock. So I would argue these are actually fairly positive results, because what do you care if a year later that sell didn't make sense if you made your money here, if you were correct here? I have to say this is actually kind of surprising. It did a pretty good job. Well, moving over to a little bit more formal analysis, quiver quantitative on my old haunt, Seeking Alpha, where I used to write, looked at the inverse Jim Cramer strategy. Now they come up with a different outcome. And so they took all of his picks, well, not all of his picks, but a bunch, and they did a reverse ETF. And here's a reverse ETF strategy. And if you look at it, it's doing pretty well. Now, this article was written the beginning of 2023. So these results are more recent than these. These are 1.5 years oldish. This is more looking back over the more recent, I guess, year, if you will. And going opposite of Cramer did pretty well, I'll have to admit. But down in the conclusion is where it gets pretty interesting. So we're just going to read here from Quiver Quantitative. It says, inverting Jim Cramer's highest conviction recommendations has yielded. Now they're talking about highest conviction, not all. So I think this analysis was bigger. This was more focused on things that they felt like he was very out front about. Now, I didn't set the criteria, but that's what this criteria is. And he says, his highest conviction recommendations have yielded another quarter of extremely lucrative returns for the Cramer-based investing strategy. It ended the year on a strong note, gaining an additional 3.49% for a compounded annual growth rate of 21.85. Given that his market underperformance has solidified to the point where inverting his stock recommendations in actuality tends to deliver alpha on the market, or better results is what they're saying, we persist with our efforts in tracking his on-air performances and believe it represents an intriguing potential profitable investment strategy. So these people on Seeking Alpha are saying if you do the inverse of Jim, you would do better. Over here, he's saying if you do what Jim says, you actually did okay. Slightly different criteria, different dates of things picked, slightly different criteria. But look, you're getting different things depending on how you look at him. And I find all this fascinating. How do you get different results when you look at the same guy? And it's how you slice it. It's how you slice the cake, right? They're slicing it this way and getting where he's actually done okay, although they don't give percent return. And it does say 1 month from his stock returns, it's an abysmal negative 223%. Certainly the buy recommendations aren't that clean. But if you had done his sells, you did okay. And the early stage buys were okay. They weren't great. They were great for a day. Maybe that's him recommending it and it boosts it. And then it kind of fades and then it goes back long term. This could be a sign that Jim is actually way out ahead of the curve. People accuse me of this all the time in gold and silver. His longer term recommendations tend to be okay. And maybe that's what we need to be looking at. Whereas if you look at the immediate return, which I think is what this is, from a smaller group of stocks, the ones in which he tends to be the most vocal, then you get a different return. It's better to trade against him. So then we have this third one from CXO Advisory Group, Guru Grades. And this is cool because it basically looks at all the quote unquote gurus. It chooses, God, I don't know, maybe 100 of them or 80 of them, I think it said, and it puts them all on this list. And so you can see Cramer as it relates to other people. Now, Cramer's down here. And if you look at it this way, it reads top accuracy at the top of the left table coming down here. And then it continues. So these two guys, Trading Wire and Charles Biderman, are smack dab in the middle. And it continues down. And if you look at Jim Cramer, he's in the bottom 50%. Now, he's right near the 50th percentile. He's like 47, 48, something like that. But he's in the bottom half. And they only looked, however, at 62 of his forecasts. And this was put out, I don't even see a date. Oh, to investigate. During 2005 to 2012, we collected 6,582 forecasts. Now, they're cherry picking somewhat because we know that Jim has made more recommendations. He's made almost 700 according to this Reddit poster. So depending on what time you look at him and what you pick, they're picking his recommendations over 7 years. He's in the bottom half, but they're kind of cherry picking because they're only picking, I don't know if they're picking them all, but I don't know. So depending on how you analyze them, it could go a bunch of different ways. So overall, I don't think it's horrible. I think what the data shows is in the immediate term, it's okay. That's the effect of Jim Cramer recommending a stock. Like I used to write for Seeking Alpha and I'd noticed stocks would pop after I wrote. And then I realized they're reading my stuff. Like I had hedge fund managers and stuff reading my stuff and stocks would pop for a short period of time if I was bullish. And sometimes I would go down a little bit if I was bearish. And that's what you have to understand about writing for financial media is you actually are part of the decision-making process for people that are looking at investments. And there was a interesting study that came out on Seeking Alpha years ago. I think it would originally, they looked at data from its inception 2004 through 2012. So Seeking Alpha started as a user contributed site at 2004. There was a group that looked at them from 2004 to 2012, and they measured two things. They measured one, is Seeking Alpha right? Is the collective knowledge of the financial sphere, guys like me and professional writers and guys with PhDs and a whole hodgepodge and mix of people, is Seeking Alpha, that idea that you can crowdsource financial information, are they correct? And secondly, does Seeking Alpha itself move the market? And what they found in that study was both things. They found one, that when people, the content for Seeking Alpha was a good sentiment indicator. It indicated when people were bullish, it indicated when people were bearish, it indicated when general markets were going to move. It was a good sign. It was a generalist sign, not every specific article, but they took the whole over 7 or 8 years. It also showed that Seeking Alpha in and of itself had grown big enough that the market would listen to it, because I had hedge fund managers following me, company executives, wealthy investors, regular everyday guys on the street. You talk about retail to accredited, professional to non-professional, everybody reads that stuff. And we found that not only did it take the temperature of the market, but it could move the market. So I think part of what we see in Jim Cramer's results is because he's such a big guy and he's talking on this big megaphone platform of CNBC, he could move the market. And I think if you go back to what he's talking about back here, when we saw that first day being very good on his buy recommendations, that could be a move. I'm not saying that's what it is, but I noticed that at Seeking Alpha, even as an individual writer with a much smaller platform. I think his medium term, 1 week and 1 month, he doesn't have a hot track record, but he look long term, this guy is picking some stuff. And so it just depends on, he's picking it correct. It just depends on how you view him, how long you were to follow his recommendation or wait on his recommendation, and whether you're buying or selling. Selling, you know, maybe when he says sell something, everybody sells, and he's right. But why would it take more than a month to recover? So I think on his sells, he's a little bit better. He may be better at picking when stuff is not going to do well. And that makes sense, because when I listened to Jim on his radio show, he was a self-professed contrarian, and he would pick stuff that may not do well for a while, and he would pick stuff that needed to sell when everybody else said it didn't. And I think this is true to, I'm going to give Jim credit here. This is true to his contrarian nature. This is like me. I've been quote unquote wrong on gold and silver for 10 years. If you consider the fact that I'm a bull. Now I'm writing about stuff that's going to happen in the future. I'm writing about longer term stuff, but if people went and graded me, I would have worse performance than Jim. But I never say it's going to happen tomorrow. I say these are the trends. And that's why we do the weekly market update. We talk about things over time. So we have immediate data, but we try to make longer term. But I think that Jim and people in the gold sector actually have a little bit of a commonality here, to give him a little credit. We are contrarians, and we pick things that are longer dated successes, which in the short term may not have immediate success. And we're also really good at picking stuff that needs to sell now, even though Mr. Market and all the ETF funds and investors don't want to sell. So as a contrarian, I think Jim's actually done okay. But if the point is, if you had just followed his recommendations on the day he made them, your performance is not great. And I think these articles show that. And I'm not trying to criticize Jim. That's just basically what I see. And I think he is a little bit of a burning bush like I am. He's a little bit of a contrarian, a little bit of a warning signal ahead of time, canary in the coal mine, if you will. And he may not get credit for that, gets a lot of criticism. But it is fair to criticize that his immediate picks don't always do well, especially on the buy side. On the sell side, looks good. The buy side may need a little bit more marinating before his ideas pick up. So is he right on gold? He came out and said it's time to buy gold. Well, if you look at what gold's doing, I think it could be time to buy gold. And I'll give Jim credit on this too. He's recommending gold before it goes back up to its all-time high. It's not trading at 2069 right now. It did in 2020 after the pandemic. So he is coming out a little bit ahead of the gold rush or the next bull cycle, which starts at 2070. Because if the last one ended at 2069, the next official one doesn't really start till 2070. So give Jim credit here. He's coming out a little bit ahead of time and saying, well, I think you should go gold now. Is that bandwagoning? I put that choice on the poll. Is it bandwagoning? Well, probably, you know, and he's had a year of data to get beat up on his calls because the stock market has sold off. The bonds weren't doing great. Bitcoin sold off. But to his credit, when gold and silver and Bitcoin came back, he picked gold. So I got to give him a little credit here. I know we love to make fun of him. I'm actually giving him just a wee bit of credit here. I think he's right in this case. Even though some of his previous recommendations didn't come out, I think if you look at who he is, I think this is the gold right here. I think gold fits on this line because I don't think in a week and a month we're going to hit 3,000 gold. I sure think it could happen later. And so in terms of gold, it makes sense looking at his past. It does make sense. Now I'm going to tell you what my thoughts on gold are and the call that I made, because if I'm going out and talking about Jim, I need to put mine out there to be fair to him. And we'll do that in just a moment. I'm going to come back because super chats are open. If you guys want to contribute to the program, you certainly can do that in super chats if you are a member or just want to support the program. And we'll talk about that. And before I get into my prediction on gold, I did want to share a message with a company and a person that I like very much. So I'm going to play a video for you guys. And you tell me what you think about this company. And we've had them on the program before. I've talked about them here. I've talked about them on Arcadia Economics on my friend Chris's channel for years. And we're going to talk about them again. And that is Reina Silver. And here we go. This is my interview with 𝙈𝙀𝙾𝙆𝙎. And Lauren, you have a really important update with regard to something that happened at Medicine Springs. I think you guys did some drilling and came out with some pretty good results. Do you want to tell us what you found?
Yeah, so, we just put out the release for our initial reconnaissance 4 drill holes that we did in 2022, and we're absolutely delighted with the results. I mean, we went into this program the idea of, do we have the features that we need for a big carbonate replacement deposit? So do we have the carbonate sequence? That's the magic host rock. You can't have a carbonate replacement deposit without carbonate. And we went through almost, we had a hole that was almost 800 meters, and the majority of that was carbonate. So you go, okay, check. And then on top of that, and we ran into bonanza grade, over a kilo of silver in a zone that's 2.5 meters across. I mean, it's not common to have the opportunity to hit such great mineralization and galvanizing our hypothesis.
So you guys are specialists at looking at these CRD types of deposits. I'm going to put up on screen your news release. Kind of walk me through what you've got here and why this is so important.
When we look at the surface at Medicine Springs, we see evidence of a big system at depth. And unlike our 𝙎𝙀𝙀𝘾𝙆𝙎 project, where we think we might have the other half of the CRD spectrum, at Medicine Springs, we think we might have the whole thing.
Oh, so that could be huge. So let's just explain real quick for people, get them up to date. You think you may have the source for what?
One of the world's largest carbonate replacement deposits. So why that's important to us, and why we were looking, for our first couple of drill holes, we wanted to know whether or not we have the carbonate sequence, because that's what you need to react with. We wanted to see evidence of a long-lived system to drive the thing, and, as well as high grade. And all 3 of those showed up in the first hole. And on top of that, we did big step outs. This was reconnaissance drilling, right? So our first hole was in sort of the historic area where there was some work done in like the 1910s. And then we stepped out over 1.5 kilometers to an area that hadn't ever been drilled before. where we intersected almost 7.5 meters of 186 grams per ton silver. Over 4.5 meters of that, I think 274 grams per ton silver. So you look at that and you go, okay, we see evidence of a big system. We're hitting our targets. It's saying, yes, continue drilling. The big question we were asking at Medicine Springs in this drill campaign was, can it stand up alongside 𝙎𝙀𝙍𝙀𝘾𝙀𝙎 and 𝙆𝙀𝙍, these big districts, famous districts where we think they can be even larger? And we feel that this drilling campaign has told us, yeah, this is a Reina Silver quality project.
And by the way, I'm a big fan of Reina Silver. We cover them for several years. It is a stock that points I participated in. I think they're one of the better junior explorers out there. Of course, I don't make stock picks. You know, I'm not your financial advisor. I do like to bring good companies on the program, and I do like Lauren a lot as well. Her father's thesis about CRD deposits is pretty famous at this point. She's definitely following his footsteps, but blazing her own trail. And I still am very positive about Reina Silver, and so continue to bring them on the program. Thank you, Reina Silver, for coming on the program. And back we go. Another quick sound check. All right, I'm going to give you my thoughts on where gold went, and where I originally presented this was actually at one of the outlets which you will see us, which is JM Bullion. Let's get into that. Now I'm just going to show you the article. I did this Fibonacci chart for JM Bullion. If you go to JM Bullion's website, I do write on their blog. And if you go here, what's gold's next price target? We answered that here on January 6th. You'll notice that I did put that fib chart up here in that article. And I basically said where we were going. Now, at the time, I think we were at something like 1846 gold. And I said we're going to hit 1900. And a few days later, we did. And how did I know that? Well, because I use technical charting. Now, technical charting is not always correct. It gives you an idea of what the market is thinking. Think about technical charting as trying to get in the brain of the algorithms that run the markets, as well as the actual traders, and how they think. And once you learn to do that, then you'll understand where the gold price is going. And it's confusing because it ain't where you think it should go based on physical trade or geopolitics or macroeconomics or supply chain deficits in the metals or the commodities boom or any of that stuff that we talk about. Now, it does in the long term. In the short term, it's a lot of technical stuff. So anyway, this is the technical chart I put out. I did a Fibonacci arc and a Fibonacci line retracement to show you how I called the gold price going correctly through 1900 and where I thought it would stop. I did think it would stop before I hit this line, and it has. It's sitting here around, was it 1935 or something this week? Let's go to gold price and get it updated. Right now, we're at gold at 1936. So this chart has been pretty much refreshed. I did it earlier today. We're sitting right at this mark. The reason I circled it in red is because we're about to hit this Fibonacci arc. Now, what is a Fibonacci? You're like, Rob, Fibonacci, slow it down, slow your roll. Fibonacci, all you need to know about him, he was an Italian mathematician, and he came up with certain levels that represent themselves in nature. It just happened. I mean, this can be used on population regressions of certain animal species. It can be used a lot of different ways. It's just a data analysis technique. We're applying it here to a financial situation and a financial chart. And when you do that, when you do Fibonacci's, the computer draws the lines for you because there's certain percentages. See 61.8 retracement, 50, 38.2. These are things that we see in nature that occur that align with Fibonacci's mathematics. And so all we're doing is using a mathematical equation that has shown up over time many different ways. And technical traders do this all the time. When I first started technical trading, one of the first things that I did was take a charting class and learn how to chart and how to do this. I'm going to teach you guys just a little bit about how to do this, because I think it's important that you guys understand. It's important when you're setting your gold targets, you know what the professionals are doing. So what I'm showing you now, what we did before is just looking at Jim, having a little fun with Jim, okay? This is more what the professional guys do. I don't know if Jim is doing this in his own right, if he even has time, but I can tell you right now, the professional traders on Seeking Alpha and everywhere else do this all the time. And I guarantee you they do it on the derivative markets. The banks, the managed money, they all do this. So what I've drawn out here is Fibonacci arc backed up by Fibonacci lines. The Fibonacci lines and chart I drew from the all-time high during the pandemic, 2069 and change, all the way down to what I'm calling the rock bottom low price, which is right at 1625, 1630. Why do I say that? Because it hasn't gone below here since we had the high. So you take the high to the nearest low and you draw your fibs, okay? And on the tool, you just literally draw from here to here, and it puts all these lines in. So you guys can do this on stock charts or Yahoo Finance, wherever they have fibs, trading charts, a lot of places where they have fibs, and they'll do it for you. And I circled where the fibs make sense. So you can see, this is Russia-Ukraine, by the way. I'm sorry, this is Russia-Ukraine. Yeah, let me get that correct. The recent pop in gold silver is a lot of geopolitical, but once we flipped into January 1, it became money going into positioning on the market for 2023. So the first run-up you see here is Russia-Ukraine. The second part of the run-up is money coming into the market saying, we want to take a long position in gold. That has changed, and I'll get to the importance of that in a moment. But let me explain the fibs for a sec. So on the fibs, the lines will be both support and resistance. So you notice where I drew where it tried this retracement of Fibonacci and fell back down. That told you that the market didn't see this psychological resistance level as being broken for gold. It said, nah, you're too frothy, come back down. It tried it again up here. This time it tested the 200-day moving average, just red squiggly. You can see 200-day moving average. So there are two indicators: moving averages, which looks at the last 50 and 200 days and averages them. And then your Fibonacci's, which are natural human tendencies, not only in markets, but in other areas of life. And if you add them together, you see all these points in which we're bumping up against resistance and it falls. We're bumping up against resistance and it falls. Then you have Russia invasion of Ukraine. Then you have the start of the new year and stuff like that. You see all these on the chart, and it moves the price around, but it stays within the latest high and the latest low. So until we have something that is so magnificent that it causes us to pop through this trading range as designated by these Fibonacci's, you'll see a breakout. We're not there yet. Russia-Ukraine got close, but the movement into money right now it's just a move into positioning. It's not the pop that's going to get us to 2070. Now, in the meantime, we could very easily hit 1950, 1960 here, and then go up to the next line, which is either 2050 or 2067. So you have a fib arc here, and you have a fib top here. This would be the last high. So it's got to break these two resistances first. The good news is you're past the moving averages, so it'll stay here for a while. But we're going to have some event to get it up to 2069 again. The 2069 was a pandemic. We don't have anything as big as the pandemic right now. So I do suspect gold will stay in this trading range for now. It'll break through its last all-time high around 2069. At the next point, we have a big point in the news cycle. What could be a big point in the news cycle? Let's talk about that for just a moment. Big points in the news cycle can be things like, gee, I don't know, another war, another big outcome in the war, somebody else jumping into the war, geopolitical. It could be some major issue with the dollar. It could be a bank failing. It could be us going into official recession and the White House not arguing about this time, saying, yeah, we're in an official recession, and everybody agrees. Anything where people recognize increased risk could punch gold up through its all-time high to the next one. I don't think it's going there right now. And on that Jan Bullion article I wrote a couple of weeks ago now, I was right. We just did the technical tracing. We picked it. We were right on the prices. Longer term, I look at it like Jim Cramer. Jim Cramer says there's risk in the market. He's right. He's calling the long term. He's not looking at fibs, I don't think, here. He's not giving specific price targets like I just did. He's saying long term we have risk. This is an acknowledgement that Jim is saying that we have risk. I got to credit Jim here. Now, is Jim going to come out every week and do a weekly market update for you guys covering the COMEX and the COT report? No. But I do want to give Jim credit here. He's right. And I think he's seeing risk. And Jim is a contrarian. And if you go back to his calls on his contrarian longer term buy calls, he's over 2/3 making the right call, 68.1%, I believe. So I have to think gold is a long-term contrarian call for him, and it fits in that category. Let's go back to that. Let me show you again. We're not only looking at what Jim has said, we're looking at the ways in which Jim has said it. And if you look at longer term contrarian calls, 63%, not quite 2/3. He's actually not half bad. And if you looked at that on Guru grades, his longer term contrarian calls would actually be up in the top, 1, 2, 3, 4, 5, 6, 7, 8. Top 10% above 60. In fact, top 8 or 9%. So I have to look at gold here for a second and say, he's probably right here, even though he's looking at it a little bit different way than I would. He's looking at it from a generalist perspective. But what value does that give you guys? Let's go back and let's tie all this together. Jim has given you a long-term contrarian signal that says go long. He's a generalist. I'm a specialist giving you a technical indicator saying the same thing. If the generalists are lining up on the side of gold, if Jim, per his recommendation, or if he's voicing something the generalists are now thinking because he's a generalist, that could be a catalyst to get it up. If the generalists come in, that could be the other catalyst. So that's a positive sign. So we do make fun of Jim because depending on how you slice and dice his calls, and I gave you 3 ways. I gave you one from 2005 to 2012. I gave you one for basically 2022 done on a professional site, and I gave you for 2021 done by a Redditor who actually did an amazing amount of work looking at almost 700. Then I think that each of those basically says he's right on gold. He could be wrong on some other things, but I think he actually could be right on gold. And so I think that's a positive thing because I think he represents what we need for gold to rise and for silver to rise, which is generalist involvement. So I'll pat him on the back for being right. Now, did he get there the way I got there? No. Do I care? No. Am I happy that a big generalist like Jim Cramer came out and said gold is going to do well? Yes, because it's our sentiment indicator. Remember what I said about Seeking Alpha. Seeking Alpha can tell you the sentiment of the market. We're getting some more positive gold stuff on Seeking Alpha. Jim Cramer is in and of himself, because he's so popular on a mainstream outlet, a sentiment indicator for generalist investors, because that's what he is. And so I think from that perspective, we're actually not doomed. I think it's actually positive. Thank you, Dumb Money Media, for the contribution. Run over to Reddit Silver DGen Club if you want to participate in that discussion. It is an alternative for you for other silver channels on Reddit. Should you want an alternative, it is definitely there. Yeah, I mean, I actually got to support Jim here. We do give him a hard time, but to be honest, on gold, I think he's right. And I think the important thing, he's a journalist on a mainstream program, and he's talking about the generalist view, and that's the most important thing to take away. We can make fun of his stock picks, and we can do the inverse Cramer stuff. We do that because he's a public figure, and to be honest, it makes him more popular. I'm sure it helps. But at the end of the day, I got to give Jim credit. I think he's aligned on gold. And the most positive thing I get out of this is the sentiment indicator of Jim Cramer on CNBC as a generalist saying, go gold. I don't think in any way, shape, or form we can discount the importance of that. And that to me is a very positive indication. So again, thank you, Jim, for making that call on gold. You saw, guys, my own call on gold back on January 6th for JM Bullion, and I was right there. Will I continue to be right? Well, gee, the time tells everything. It tells the truth. You guys will come back and let me know, I'm sure, if we're right or wrong. But the most important thing to get out of this video is I do think that there are positive, what we call green shoots in economics, that things are starting to sprout. We're starting to, in other words, see spring in the gold sector because we're seeing green shoots. And the fact that Jim came out and has multiple times in the last month or two called positivity on gold, either somebody in the derivative markets is telling him what they're going to do, or he's on to it, that we're in a risk environment, and that in a risk environment, gold does well. I'll also point out we're in a deflationary mini cycle out of the overall inflation big cycle. We're in a temporary deflation, and I think Jim knows, as well as many journalists know, that gold does best in a deflation. I don't think we're in the extended deflation yet, but we'll see if my call on that is correct or not also. But that's another reason why I think gold is doing well. I think Jim sees that. Jim is not a dummy. He didn't get on TV for being a dummy. And as much as we make fun of him, I will give him credit here. I would love to see Jim go back to his old radio roots and really tell it like it is. I feel like sometimes on TV, even though you see him making calls, he holds back. But we'll see. I'll continue to follow Jim Cramer a little bit and let you know what he thinks. I did not see any super chats, guys, other than Dumb Money Media, which we have recognized. So I'll take the last minute or so to recommend our unfiltered service. If you guys have not seen it, and we do have almost 50 people signed up, and thank you so much for our supporters for supporting us on Unfiltered. We have a few here today. We do have EC660, Angel OG, and some other people who are supporters of the program. Hopefully I got you guys correct. If I called you out and it's wrong, my fault. But in any case, we do Unfiltered, and I did put out an episode of the mind map. The mind map are basically 9 categories we're going to talk about. It goes beyond gold and silver, talks about a whole lot of other stuff. If you want to see that mind map, episode 0, the foundation for what we'll talk about on the membership program here at YouTube or Unfiltered, I tell you what we're going to talk about. And we've already done 9 episodes or 10 episodes, I think now, for that. And we're about to start season 2. If you guys are interested in getting in on season 2, you can become a member and support us. And we do appreciate that. If you want to see the mind map, go to our free video section. A couple of days ago, we put that out. I think Sunday night we put that out. You can go see it. All right. I think that's going to do it. I don't see any extra questions. I think we have covered the material. Thursday, we're going to come out and I'm going to do more. I don't think I'll do a live this time. I'm going to do a pre-record, but we're going to have a lot of good stuff. I've been doing a lot of research, and I think Thursday's report is going to be a lot of fun. Then, of course, we should be heading out to Vancouver for VRIC this weekend. I will cover that event, what I think is good from that event. Of course, I have a presentation there as well. If you guys are going to be out there, come see me. I've already had at least one person on Twitter say they saw me at Silver Symposium. They're going to join me out there in Vancouver as well. So that will be a lot of fun. And of course, we'll come back next week and do our regular content slate. But remember, don't jump off the channel. We have playlists down there for you. Lots of more stuff for you guys to view. I fully recommend a lot of the playlists we have. We organize that for you into stories, and we think you'll enjoy that. Lots of research and good stuff there. Until next time, this is going to do it. I'm 𝙆𝙀𝙾𝙆𝙊𝙇𝙎, and this is Gold Silver Pros.